Welcome to CEO, leading the real economy. RSM's continuing series of conversations with middle market leaders about keeping their businesses on track through the public health crisis, modern challenges, and economic volatility. Here's your host, Joe Adams, CEO and Managing Partner of RSM US LLP.
Hi, everyone, and welcome. I'm Joe Adams, and today I'm joined by Craig Dwight, CEO of Horizon Bank, a $5 billion publicly traded bank based in Michigan City, Indiana. Thanks for joining me today, Craig.
Joe, delighted to be here. Look forward to the conversation.
So here we are, moving toward the end of August, over 5 months into this pandemic, impact on the economy, of course, as well. What are the greatest challenges facing your bank right now, Craig?
Well, Joe, the COVID-19 virus still persists out there today. So our number one priority has to be the safety and well-being of our employees, customers, their families, and the community at large. With that said, we've somewhat stabilized over the last 45 days and have adopted well to the COVID-19 protocols after our offices reopened for walk-in traffic. So that's stabilized. We're now switching our focus to our strategic plan. We are focused on growth. We think there's growth opportunities, and I'm kind of excited about that future and getting the people re-energized and off the COVID-19 risk factors and looking forward to how we can grow this company.
Obviously, I've seen your bank has been involved in over 2,300 Paycheck Protection Program loans that you've made to your customers. What went into your response back in March when the program was laid out, and how have you been able to really secure that level of success?
Well, first of all, we have been an SBA preferred lender for a couple of decades now. So we're used to the SBA process and improving our own SBA loans. And that contact and experience had prepared us well for the CARES Act and the PPP or Payroll Protection Program loans. There were some considerable challenges going into that, but we've always felt it's our job and duty to bring federal tax dollars back to our community. This is just one way to do that and to help our small businesses survive.
So what were some of the challenges in getting that program up and running for your bank?
Well, first of all, you have to appreciate Congress had to act quickly to deal with COVID-19. They passed the CARES Act, and then the SBA had a couple of weeks to implement it. And so on May 10th is when we started accepting applications. However, on May 9th is when the SBA finalized their application that was allowed to be submitted to them. And prior to that time, they had 4 or 5 different renditions of the application that we were sending out to customers to fill out. And then we had to go back and get the most current one. So about 8 o'clock on Thursday night, the final application came out, and by 10 o'clock the next morning, we were using the new application. So just kudos to our team, how they kept apprised of the SBA changes, were able to implement them quickly, and then to move forward. And then the next challenge was in 2 weeks, phase 1 or round 1 of the PPP loan program was totally exhausted. So in 2 weeks, we submitted a couple thousand applications for approval. And so our employees were working till midnight. Some were coming in at 4 in the morning to stay ahead of the curve to make sure we had access to the SBA system. And I have to compliment the SBA too. I know we were slammed with this kind of workload. I'm not sure how they handled it, but they were able to get through it as well.
Sure. And I'm sure your customers certainly appreciate the level of attention that you provided to them. What's their reaction been?
Very positive. I'm on the street regularly and talking with customers, and I can regularly come back with they appreciate the fact that Horizon Bank was there to help them with the PPP loan program. It gave them an extra cash cushion. Some have not even used all the proceeds yet for their payroll, which is a good thing. They're still absorbing that cash into their companies. But overall, very positive. We think that's an opportunity for us to shine with some of our competition, especially the super large national banks that may have stubbed their toes in at least round 1.
Yeah, they seem to be a little slower to react. And I think community banks such as yourselves really, with that personal touch, I think has made a big difference for your customers. So kudos to you and great work so far. When you think back to the Great Recession in the late 2008-9 timeframe, What types of things do you see that are similar to that, and what types of things do you see are different?
Well, the Great Recession took time to evolve, and I think it started with the WAMU and the Lehman Brothers failure. And then the question for the markets was, what is the underlying value of assets in general? And then you had the subprime mortgage debacle that compounded that and made all asset values come into question. Banks were able to move slowly to prepare for that. And like I said, we didn't hit our heavy losses till 2010, almost 12 to 15 months after the recession was over. And that was true of the industry as a whole. And we were still hitting record profits during the Great Recession because of our mortgage business. This recession was a hard stop. The other one, I think, was more driven, the Great Recession was driven by the consumer retail and the investment community's question of underlying assets. This one was a hard stop with business community, especially the retail, non-essential businesses. And that's the big difference. Of our payment deferrals, 88% of the dollars are in the business sector. Our mortgage and consumer loan deferrals are less than national averages and are less than the Great Recession. Now that could change because the stimulus money, as you mentioned earlier, is rolled off and the checks have been reduced for the unemployment. But I think that'll come back out again. Something will happen.
Have you noticed any trends or similarities with regard to the needs of your borrowers?
You know, not only the PPP program gave us trends, but also the deferral payments that we processed. And from March until June, we hit our peak in the number of loans that were deferred for 90 days up to 6 months. And there are certain sectors, both from the PPP application and deferred payment, that have indicated greater stress going into this recession. One would be the hotel industry, obviously restaurants. We had a high number of health services industries that applied for payment deferral, which was a surprise to me. I really wasn't on top of the healthcare industry as well, that they were limiting services in the hospitals and outpatient elective procedures. And so a lot of the doctors, dental offices, et cetera, were struggling, but they have bounced back quickly, and now they're working extra time to catch up. So that was an industry that surprised me at first. But the other industries, manufacturing's come back really well in our marketplace. But still, the restaurants, hotels, and the service retail side is still struggling a little bit. But the ingenuity of our customers amazes me, and they're finding ways to get through this.
So now that the window for the PPP loan forgiveness is open for the loan forgiveness, how has that impacted your customers, and how is that process going for them?
Well, the window opened August 10th, and we've elected not to start accepting forgiveness applications until September 1st. We have an automated process that's in place that will handle most of the forgiveness applications. However, with that said, our advice to customers is with the CARES Act as amended, allowed them to take 24 weeks of payroll versus the original 8 weeks of payroll. So we're advising them to use up their full forgiveness amount and use the full 24 weeks of payroll if that's what it takes to get the forgiveness. The other side is there's 3 pieces of legislation or bills in Congress that could modify the forgiveness process, including forgiving all loans under $150,000, which is about 80% of our total loans that we made, by the way. And if they do that and simplify the process, why go through the headaches now of the very exhaustive 11-page application to seek forgiveness? So most of our customers are willing to hold off for a while, although with that said, we are taking applications starting September 1st.
Sure, that's great. So switching gears a bit, the other area that's been affected, and with the mortgage rates declining to really almost record lows, if not record lows, how has the mortgage business been impacted, and what are you doing in that area?
It's a pleasant surprise. We're hitting record volumes with our mortgage production for our company. But the surprise is, 50% of that is purchases and 50% refinances. Where a year ago we had 70% purchases and 30% refinances. I would have expected a higher refinance, which is telling me that the purchase transactions, buying homes, is very strong today. So people are I think, showing a lot of confidence in their ability to continue their income streams to purchase homes. But record volumes, record fee income, record gain on sales too with these low interest rates. So we're delighted it's there. We've always had multiple revenue streams to diversify our risk profile in our company. And the mortgage lending business we've been in for a long time has helped diversify some other areas that are actually falling back, such as consumer lending and commercial lending.
Yeah, no, it's great to see people, willing to make that leap, I guess. Sure, it's going to be helpful for the economy in the long run, seeing that occur.
So the suggestion to borrowers, both business and retail, is refinance, lock in a long-term rate. One of two things you can either shorten the duration of your loan, pay it off sooner by keeping your payments the same, or two, you can lower your payments by keeping comparable term and help your cash flow. So either way, it's a win-win, and that's what the market's offering today. So take what the market's offering.
I think you guys have just done a phenomenal job staying close to the community. I also understand you do a lot on the charitable side as well, as you work with the communities in the various towns that you have branches.
Yeah, this is kind of a maybe this year or next year or throughout years. It's time to transition to the new era of banking. And so it's not all about the bottom line. It's about supporting the community. So we've actually increased our contributions to not-for-profit, especially those with that are focused on COVID-19 issues, housing, unemployment, food banks, the utility payments as a whole. We've given money to hospitals as well. They're doing a great job here locally. So it's not the time to pull back that dollar.
So I know Horizon has adopted the current expected credit loss accounting standard, new standard coming up here. What long-term impact do you believe the economic downturn will have on CECL?
First of all, I think CECL was an excellent move. Quite frankly, I've been in banking 41 years. In the 80s and 90s, we used to always build our reserves in anticipation of the next recession, which happens about every 5 years. And then we got off that methodology probably 10 years ago due to the accounting rules as well as SEC oversight of earnings manipulation by banks or the threat of that. And so CECL is really converting back to what I used to do in banking 30, 40 years ago. It's the right thing. The difference in CECL is how we approach it. We use two methodologies. We're using the historical loss methodology. And as you can expect, our loan cohorts loss history has been pretty good the last 7, 8 years. So we're allocating very little expense to refund our loan loss reserve from a loan loss history. However, we're increasing our allocation due to econometrics, forward-looking economic metrics that are telling us that something's going to happen. We just don't know where it's going to happen, given the high unemployment rates, the GDP showing a recession. So we're funding additional dollars to our reserve because of that. So I think the model and the concept of CECL is working well. The risk is every dollar in new loans we book, it is increasing the cost to those new loans. But I think it'd be short-sighted by bankers to not produce and continue to look at new production just because that cost for that one credit is higher than it was a year ago.
I think about where we're headed now, and just when the stimulus money runs out and this next package, who knows what's going to happen? That's still up in the air. But at some point, like you say, there's high unemployment and it's going to have an impact. And then how severe it is, I guess we're all going to find out.
And just like other recessions before, banks incur their losses typically 12 to 18 months after the recession's probably over with. And so I really think the banks will have their losses in 21, maybe early 2022. But we're funding those losses now and setting our reserves. The other positive, going into this recession, banks had excellent capital, and I thought this timing of CECL was excellent for the 1/1 adoption rate right before the unknown COVID-19 virus hit. So we even strengthened our loan loss reserves prior to the pandemic. So I think the banks are in great shape through this recession.
So, of course, you're operating a bank, you have customers coming in. What has the process of reopening your branches been like? And what have the main challenges been, and what challenges remain?
Well, Joe, first, our offices were open all the time. However, we went from walk-in traffic to by appointment only, and our customers have accepted that transition really well. To reopen, we started opening the offices in June 15th. We have 75 offices, and by end of June, 95% were open. We had 2 offices that we did not open because of the unique design And it took a little bit longer. They weren't open up until mid-July. But we committed to our employees that we would not open the offices until we had the protocols in place, the plexiglass up and operational, the directional signage for our employees for safe social distancing, the masks, the gloves, the sanitation sprays, et cetera, were all in place before we opened any of the offices. And so that gave some comfort to our employees. But with that said, there was some anxiety, the first couple of weeks that you opened up with employees not sure what to expect. And we required masks all along for our customers to come in the lobbies. And the good news is the customers have been cooperative. They're still calling to make appointments to come into the bank. And so the anxiety levels of the last 6 weeks have reduced substantially in our branch offices, and things are working well.
Let's talk about leadership for a second, Craig. You've been at the bank for, I think, at least a few decades, and certainly have drawn upon many learning experiences along the way. What were you able to draw upon that experience, and how did you draw upon that dealing with some of the unknowns of this recent challenge?
Having top talent on your team, those that are self-motivated, self-starters, take action to get things done, are continuous learners, add tremendous value to your company, who are open to new ideas, seek information. And we're fortunate to have a lot of those at Horizon Bank, and that's why we were able to get through the COVID crisis and help our customers with the PPP program, et cetera. So having a good team is absolutely critical. I think we'd all probably say the same thing. The other part would be problems are going to arise in life and in business. You just have to try to prepare for them and plan for them as best as you can. And we have a very simple process for identifying and working out problems. The first thing is people first. Safety, well-being of our employees, customers is number one. Second is preservation of assets and data. And then third, starting to resume your business continuity and get it back in operation. And then tying all that together is a communication strategy. You have to communicate with the stakeholders on a regular basis, and even to the point where when the crisis is over, you need to tell them the crisis is over. So they can put things behind them and go forward. And we're kind of in that stage now that we think the crisis is now the new norm, and we've adopted to COVID-19, and let's start reverting back to our strategic plan and looking for ways to grow Horizon Bank and take advantage of a lot of the companies are setting back and not doing anything.
So as you look at the last 5 months, what's one lesson you've learned during this period that can be applied to any business, not just the banking business?
Lesson in the last 5 months is number one, diversity of your asset mix and revenue streams. So often we have a tendency, things are going so well. We have this one great customer we want to continue to provide service to, but they're 80% of our revenue, and your risk is huge. So diversification is important, and you need to keep that back of your mind. Number two would be your personal well-being. Keep close contact with your friends, your family. I always say find some me time. For me, it's reading books, riding a bicycle, water skiing, stuff like that. But get some free time and distract yourself from the business once in a while and to rejuvenate your soul. And then from a financial perspective, leverage is risk. And if you want to have a highly leveraged company, go for it. But I tell you what, when things get tough, you don't have liquidity or the capital to survive, you're going to be out in the first one out the door. And so manage your leverage, your risk, manage the liquidity as well. Because right now it's all about liquidity and cash on hand.